So I think this is a pretty good time for me to make this video. But what even is Bitcoin? Hey guys, I'm Sprague, and I love cryptocurrency. I have the majority of my investment portfolio in it, and from a technology standpoint, outside of YouTube, I am a software engineer and just all-round bit of a nerd, so it just fascinates me. Now, there's been a lot of buzz in the news about cryptocurrency lately, and it's caused the price of Bitcoin to skyrocket. And with this, a whole slew of new investors have joined the scene. The problem is, a lot of these investors don't really seem to understand what Bitcoin and the blockchain actually is. So in this video, I hope to explain both of those things and why they were created. So firstly, Bitcoin isn't a currency like the dollar or the pound is a currency. Bitcoin's more like a digital version of gold. And where gold also has no intrinsic value and its value is defined by its scarcity and what people are willing to pay for it, that's the exact same with Bitcoin. If we've got the dollar, the pound, the euro, why do we need something like Bitcoin? Well, over human history, we've moved from having gold-backed currencies to non-gold-backed currencies, which are called fiat currencies. And these currencies only have a value because the government has defined them as legal tender. This creates a problem because, for example, take this £10 note. As the number of goods and services in a market increases, the purchasing power of this £10 note increases alongside it, meaning that this £10 is actually now worth more than it started as. But to combat this, governments will print more money, which now means that this £10 is actually worth less than it started as. And this is one of the primary causes of inflation. So, when the financial crash of 2008 happened, an anonymous figure by the name of Satoshi Nakamoto decided to create Bitcoin and the blockchain as a direct response to people's growing distrust of fiat currencies and financial institutions. The idea behind it being that it would be a global currency that used peer-to-peer transactions, meaning no need for an intermediary to verify any of the transactions on the network. So as I said, one of the big problems with fiat currencies is inflation, and because of this, Bitcoin was designed to be deflationary. So that means that there will only ever be 21 million Bitcoin in existence. But they don't all exist yet. Only 18.6 million Bitcoins have been mined so far. But because of a thing called Bitcoin halving, which is where the amount of Bitcoin that miners get per block decreases by 50%, means that it takes exponentially longer for newer Bitcoins to come into circulation. So because of this, the final Bitcoin is estimated to be mined roughly around the year 2140. As I said at the start of the video, I am a massive nerd. And as much as I would love to give you an in-depth technological breakdown of how the blockchain works, this video would be far too long. And most of you would be asleep or have clicked off the video long before I ever got to the points that actually matter. So instead, I'm just going to give you an analogy of how the blockchain actually works. Take this box. It's not a box, but it's going to have to make do. Now, let's say that I have £10 in this box. You, the viewer, can confirm that there is in fact £10 in this box. This box is an address on the blockchain network. Now, let's say that I am the key holder for this box, and I want to transfer the £10 that's inside this box into a box that my girlfriend is the key holder for. Well, at this point, you, the viewer, can confirm that my box or address is now empty. And at this point, this £10 is kind of in limbo until enough of you can confirm that you watched this £10 note come out of my box and go into the other box. So, you might notice that I was being very specific about my wording around key holder. This is because you don't own the box that your funds are in. You merely own the key to that box, which means that if my girlfriend was to give me the key to her box, I could now take the funds out and transfer them elsewhere. So you might be wondering, well then who does own the addresses? And that's where it gets a little confusing and where the analogy kind of falls apart a little bit. Because those addresses are just part of the network. They are just a place to send Bitcoin to or send Bitcoin from. They don't actually store anything at that address other than a record in what is essentially just a giant public ledger. And that's essentially how the Bitcoin network works, which is the blockchain. It is just completely transparent. there is nothing hidden behind closed doors. You can see every transaction. You can see every balance if you really wanted to. You can go to the blockchain and look up, for example, my wallet address and see how much I've got in there. You'd have a hard time finding it though, because none of your personal information is stored with your address. It is just part of the network. And without me sharing with you what my address is, you would have no way of finding it. And that's why it works. Because as long as I don't give you or anyone my key, and as long as I don't lose it myself, my Bitcoin will always be secure on the network, but completely anonymously. But you might be thinking, I've heard of people losing their Bitcoin. How can that be true if it's part of a public ledger and is never going anywhere and is completely secure? Well, remember how I said that you have a key? Well, if you were to lose your key, there is no way for you to recover your coins. And you're going to end up like this guy. There's a saying in crypto, which is, not your keys, not your coin. And what this essentially means is that when you're entrusting a third-party service like an exchange or a wallet that doesn't give you your private keys to store your crypto, then you are entrusting them with your currency. No different to if you were to put it in a bank. And what that means is that if that company was to just disappear, your coins would go with them. And this is why, if you're serious about investing in Bitcoin, it is worth getting yourself a hardware wallet like this. This is a Ledger Nano S. This is the private key that I use to connect to the blockchain and access my currency. Now, I've dropped a link for this down below, but I would always say do your own research before you purchase anything, because just because I've decided that this is the best way to store my cryptocurrency does not mean that my decision is infallible. So what does this actually do? Well, contrary to what a lot of people who own these believe, this doesn't actually store my cryptocurrency. It is just my key to the network. But what it does is it stops my key from being digitally stolen. And also means that if I was to lose this or break this, I have a way of recovering it. So hopefully this video has explained what the blockchain actually is and what Bitcoin is, and why it's actually probably a safer store of value than storing your money in a bank, because everything is out publicly in the open on this giant ledger that is the blockchain. Now, if you've made it all the way to the end of the video, feel free to drop me a comment down below as to whether you are a new investor jumping on this hype train, a seasoned hodler, or somewhere in between. Thanks for watching, guys.